Not yet. I guess she's good.
Mona, you gonna pass around the roll?
Oh, that's good. It's on the wall.
So,
Yeah, there's a rock.
The less communication.
can I have a motion to approve the
Good,
agenda?
So moved.
Second.
Carol, second Butch. Is there an objection to asking Matt to also give a report, that's my error, to give a report about what you submitted in the budget for insurance?
Heidi would be the one who would go with that.
No changes.
Yeah, there's no inspection.
I don't remember any changes to the budget.
I don't think there are any.
I don't believe there are any.
Okay. So can we just include that in the minutes?
That there are no changes.
No changes in the budget that was. Do we need to vote to approve the agenda? Any objections?
None.
James approved. Motion to approve the minutes from the last meeting. Got a motion, is there a second? Second to approve the minutes from the
Second.
last meeting. Butch, second. Any opposition? Motion passes. Reports. First quarterly report from the folks from Lynn Fontaine's office.
Wonderful.
Renee.
We have worked so hard to clone Lynn Fontaine, and we still haven't successfully done it. So he had to be 2 places at once this evening, and he sent the newer, younger version.
Okay.
The 18.
We'll just have you grow a beard. And then
That's
you
right.
can
That
just
won't happen anytime soon. Oh, despite my trying, that won't happen.
Still too young.
So we'll wait until everybody
Can
gets
you put another one right here?
their
He'll be
copy.
here.
We brought this bad weather in.
Yeah.
Thank you for the weather. The rain.
We can knock out that 5 minutes.
It is.
So we have good news to report. It's always nice to be able to deliver good news. And we'll go through that in great detail, covering the time period from January through April. And in a very high level overview, you will see here as we go through it that medical claims are up due significantly to several high claimants and an increase in hospital inpatient utilization, which is also attributable to those high claimants. Fortunately, we put in some good measures in terms of the reinsurance, and we've also implemented some new changes to the prescription drug coverage, which have combined to help mitigate and offset that spike in those claims due to the high claims. So we'll go in through this in much more detail. You can see on our first page, in the first column to the left, our total medical claims for this period is 10,295,116. Our prescription drug claims are 5,364,812. Total claims you see at 15,659,000. Our reimbursements are significantly up. That is due to the reinsurance reimbursements on 2 of those high claimants. In addition to that, so the first component of that with reinsurance reimbursements is 362,366, and the pharmacy rebates, which is a huge component of this, is 676,255. That's where we get our reimbursements up to $1,038,000.
Is that on this sheet, what you just said?
Yeah, just the total. The total of that reimbursements. You see plan reimbursements
Okay.
at $1,038,000.
All right, see that.
Right beneath that is our retiree drug subsidies, reducing our total claims to a net claims paid of $14,232,600. Add to that our fixed costs, which is $1,178,197. add to that the retiree premium for Humana of $296,417, gives us a total plan cost of $15,707,213. Then we take our funding into consideration, which is the active and retiree contributions, also the board share of active and retiree contribution, along with the COBRA and leave of absence funding there, brings our total funding to $16,731,202, which is a surplus of $1,023,989. So we can see how this correlates on a per employee per month basis on the following page. Same data, we've just taken those large numbers down to a per employee per month basis. This helps us see the trends from prior years because we're only looking at 4 months of data. So you'll see those same medical claims on a per employee per month basis of $469 per employee per month. In 2017, which was a great year for the plan, you had a 401 per employee per month basis. That's a 17% increase. That's the large part of our increase. Again, we've got 3 high claimants that are significantly contributing to this that are no longer a part of your plan. And we'll get to specific details on those 3 in just a minute. You also see right below that a prescription drug claims paid of $245 PEPM. You compare that to last year, it was $282. So we've seen a significant decrease in our drug spend. That correlates to those benefit changes that were made last year, which was better pricing, higher rebates, and more management rules related to things like quantity limits and prior authorizations, as well as some minor adjustments to the copays for prescription. So that's helped to reduce that expense for prescription drugs. Probably the biggest component of healthcare spending that is so difficult to manage right now and out of control is prescription drug costs. So this is a phenomenal trend to see a 13% decrease on a PEPM basis, which helps offset that 17% spike we see in those claims.
So don't you think the increase in the copay attributes to that?
Sure. All of that combined is helping. And again, what we're doing is looking for ways to help control that drug cost. We get into some slides in the future that shows what drug costs have done since 2012 and what they are currently at, and you'll get the picture of how important it is to manage those drug costs. And so you're exactly right. That is part of it. So that brings our total claims paid to $714 per employee per month. We add back our plan reimbursements. That's a 47 PEPM, which you can see is significantly higher than the amount from 2017, largely in part to the prescription rebates as well as the reinsurance reimbursements that we've received thus far. We see our total plan cost, about 3/4 of the way down, $690 per employee per month versus $680. In comparison to last year, it's a 1.5% increase in your total plan cost. Any questions so far?
Anybody have questions?
Now we'll take this data and drill down deeper into each one of these elements. Starting off with enrollment, this shows that you've had a participation increase of 2.1%. But what's important on this slide to note is that our membership, which is total belly button, so when you bring on a new employee or a new employee elects the plan, are they bringing dependents and spouses with them? This shows that they are not, which is good. Some of the trends that you see during these economic times when we're having difficult times in the energy and marine space is that maybe we're picking up more dependents. And we'll see later on that the trend with dependents is that they cost more than employees. So we always want to be monitoring that. This is good information that our membership is not outpacing our participation with employees. Next shows you what your total membership is. This is 9,723 belly buttons on your plan, employees and dependents. And that is a 2% increase as compared to 2017. Since 2012, it's increased by 11.9% since 2012. Here is the data that correlates to why we monitor membership. This is belly buttons. If you'll see here, average paid per member for employee is $504.64. For spouses, it's $408. So this is even more good data, because the trend or the typical scenario is that spouses cost more than employees. That's why we monitor the membership. But you're even trending well with the fact that your spouses are costing almost 20% less than the employee on a PEPM basis. So that's good data. On a 3-year average, the employee the spouse is 7% lower than employee cost on a 3-year average. So your spouses are on a 3-year average are still 7% less than employee. Good numbers there. Medical claims paid per employee per month. This is where we see that spike. That was the 401 from 2017 that has increased to 469 for this 4-month period. It's due to an increase in high claimants. We'll show you more data on that in a little bit. That has a result of a 59.2% increase in inpatient utilization. That's driving that 17% increase. 3 highest claimants that have claims over $20,000. So there's a range we'll get to in a little bit, but the 3 highest in that category total $1,073,460, and those 3 are not ongoing. So that's contributing to these numbers. The good news is that they're no longer on your plan. Even with the 17% increase, the way that we get down to only a 1.5% increase in your total plan cost, that is a function of proper structure with your reinsurance. It's also attributable to the benefit adjustments we talked about earlier with pharmacy. It's also attributable to contribution changes that helps offset some of those expenses. So that's additional funding. Prescription claims paid per employee per month. This is where we see our decrease of 13%. Again, that's due to contractual improvements and benefit changes that were implemented 1/1 of 2018. Better drug pricing, deeper discounts, higher rebates, copay adjustments, and an increase in those management rules. Total claims paid per employee per month. So that's our medical and our pharmacy. That's an increase of 4.5%. This next slide here was requested at one of the previous meetings, and it was requested to help illustrate the participation based upon the 3 different plan options. So what this shows is it shows the total participation as both in numbers enrolled and as a percentage. You can see that the basic plan has the most membership in it, with 69% of total participation, and it accounts for 72% of the total claims. Your Blue Saver has 16% of the total participation and 5.4% of your total paid claims. That's from 2017, but that's a full year. We're not. There was some migration from the basic plan into your Blue Saver. I'm using the plan years, or I'm discussing the plan years from 2017 just to give you a picture of how that broke out over the course of the entire year. The Blue Saver, which has a deductible and no copays, it might work out differently believe the latter part of the year as people have met their deductible. And your basic and your enhanced plans do have copays for prescriptions, copays for doctor visits. So it's likely that they would be incurring a lot more cost in this first quarter.
Okay, what's the percentage of the whole again for that particular group?
For which particular group?
For the Blue Saver.
Blue Saver, well, for 2017, it was 16.1.
Yeah, but I'm talking about from the, you gave 72% basically is in the basic plan.
The expenses, correct. The
and
expenses for the Blue Saver,
yes.
5.4. That's the 2017 numbers.
Right, okay, I got it.
I think what's interesting here is also to take into consideration some of the reasons individuals make these choices, and I think you could suggest that higher utilizers are probably going to be least likely to go the high deductible route, even though maybe we would want to steer them that route. So it would be natural that we would see a higher cost coming from the basic and the enhanced plans, because those are the plans that have copay features for doctor visits and copay features for ER, copay for prescriptions, low deductibles, and low out-of-pocket. So naturally, those that are higher utilizers are going to gravitate towards the basic and the enhanced. This is really just to show you a breakdown of what percentage is in which plan and how those costs break out. So your total plan cost per employee per month. So this is all of our claims minus our total claims minus reimbursements, retiree drug subsidies, plus our fixed cost on a per employee per month basis. We're at $690. 2017 we were at $680. That's a 1.5% increase. What's that? It's not a whole year, but that's why we do it on a per employee per month basis, so that we can see how that correlates. Otherwise, we do have another slide later on that I think will point to some of your questions.
If a 4-high claim is no longer on the plan, you should probably see that reducing.
That is correct. That's the good news with them not being on the plan, is we should see this correct itself. Claims by type of service. So this outlines claims on a per employee per month basis in that grid below, broken out by inpatient, outpatient, professional, drugs, and other. I think what's interesting to point out here is that we certainly have seen an increase in the inpatient expenses, but when we look at that from a percentage increase, we're looking at 164 per employee per month versus your 103, which if you look back to 2013, that's the floor, that's the lowest PEPM you've had since 2013. So it's a large increase, but it is coming off of one of your best years. Next slides get into diagnosis. This first one is top diagnosis on an inpatient basis. It's the grid on the bottom to the left is our January through April. At the very top of that, you will see circulatory neoplasms. That's heart and cancer, which are two of your highest claimants, two of which are not on your, are no longer ongoing. On an outpatient basis, same two at the top, circulatory and neoplasms, heart cancer. The next slide, 14, shows us where it happened. Lafayette General Medical Center being your top facility, and Our Lady of Lourdes coming in just below that. Now we'll be getting into some prescription drug numbers here. Great numbers to report. This is utilization by number of scripts. So we have 87% of the drugs being dispensed are generic. A very high number. 13% is brand. This is a wonderful number here. High utilization in generics. you'll find this very interesting on the following slide, though. The blue column represents your total cost for generics. So 87% of your drugs that are dispensed only account for 16% of your prescription costs. The 13% is driving 84% of your prescription costs. So back to our comment early on, was that this is an area of expense that needs to be closely watched, managed, and strategized over. Our utilization, the number of scripts on the following page, is actually down slightly from prior year. Now we'll get into a deeper dive on prescriptions. This first one is the top 10 drugs by number of scripts written. We see a lot of heart and cholesterol in this top 10. We see some anti-diabetic as well. The good in this slide here is that we don't see ADHD in that top 10. Other good is that we don't see pain meds increasing in the categories. With the nationwide crisis surrounding pain and opioids, it's great that we don't see that rising up in the number of scripts being written. Next page is by dollar amount. The drugs here are a mix of cancer, heart, some rheumatoid arthritis, anti-clotting, cancer. But the takeaway from this slide is that the top 10, and this is a footnote on the slide, the top 10 medications by dollar amount only represent 2.1% of the total number of scripts. 26.4 of the total cost. So it's only representing a fraction of what's being prescribed and filled, but more than a quarter of the cost.
I've seen the commercials for every one of them.
Yep.
Most of the days when we didn't have commercials.
Right.
So PPO savings, our savings has increased to 70.3%. That's a function of high inpatient utilization. That's the category of services where we see the highest discount in those services. So having a 59% increase in that inpatient utilization also is correlating to 73% PPO savings. And the following slide also correlates to our network, that we have a 98.3% network utilization. So the network is working. That's the takeaway from both of those two. Contribution analysis. You see a 3.1% increase in the board cost and a 1.75% decrease from 228 to 224 in the employee cost. That is a reflection of that migration. More people moved over to the Blue Saver plan, and there are more single employees, driving that cost down. Cost breakdown, this just shows you a breakdown between where your money is going. 93.3% of it goes to claims. That 1.2 goes towards reinsurance and 5.5 towards administration. Just a very lean structure. If you look at the same structure in comparison to a fully insured structure, the breakout would be 15% towards administration and 85% towards claims. So you're doing well there. Here is the snapshot of January through April of 2017 compared to our January 1 through April 30th of 18. And I'll point to the bottom 3 rows, that's claimants in excess of $20,000. In 2017, in the same time frame, we had 68 in those 3 rows. That attributed to 3,121,325, or 38.9% of the total paid claims. So those 63 contributed or accounted for 38% of the claims. Currently, we have 95 in those 3 bands that account for 49.7% of those total costs, which total $5,155,474. Of those numbers, those 3 at the very top that account for $1,073,460 are no longer ongoing, no longer on your plan. And then the final page says a lot of what I just said in bullet summary fashion. Any questions?
I had one question. Looking back at our prescription drug utilization, and we have basically 13% of our prescriptions, page 15 and 16. 13% of our prescriptions are running up 84% of our costs there. And it is brand, I do see that. Can we get a breakdown on that as far as what percentage of that would be compounding is adding to that?
Sure.
I'm trying to figure out, that seems like a high cost area that maybe we can target, and maybe the compounding is contributing a lot to that cost, and maybe we can look at possibly instituting something to try and reduce that effort to compound the drugs.
We did put in limits. Do you remember?
Yeah, there are limits for compounding drugs, but I can break down the reporting even further to tell you of that 13%, how much of that is coming from compounding.
I'd like to know that, thank you.
Yeah, no problem.
There's also where they actually, it's in pills form or, liquid form, but they also are combining some drugs like Advil and something else and whatnot. And you're going from 2 scripts that would cost you maybe $10 each to one that would cost you $1,000. And then, because that happened to my wife. And are we watching things like that when we're looking at that?
Yeah, those are combination drugs.
Yeah, and they just, all they do is they put it together.
Yeah.
Crestor, I think, is like one of them.
Duex is also one where they combine a Prilosec over the counter with an ibuprofen.
Yes.
And it's over the counter, you can get it for probably less than $30, and the prescription for Duex is $1,200.
Wow.
So certainly, that's something that's being watched.
That's what it was.
And needs to be watched.
Yes.
There are a lot of those.
So we are watching those things like that.
I know they're being denied because I've gotten some appeals. So,
Okay.
Yeah.
We put a program in place. It's the low clinical value program, where those drugs that are considered like a Duexis, those combination drugs where you can get a over-the-counter alternative for much cheaper.
Right.
Those kinds of medications are currently not being covered. But I will check on the compounding drug costs for you, and all those programs that we did put into place for January, that's helping keep the costs down. It has a lot to do with those kinds of
With that
medications.
doctor.
Any more questions?
Nope.
Thank you so much for coming.
You're welcome.
Good job, guys. Thank you.
Hope the rest of the year is the same way.
Hope so. Moving in the right direction.
Next item on the agenda. If there are are there comments?
Just,
Yeah.
Go ahead.
I know we got the email for the shopper thing, which I'm quite excited about. I actually haven't had a chance to read it yet, but so we've launched that, and I think what's the plan to promote that a little bit?
Well, you should have gotten a card in the mail this week because I know I did. We did a mail out. Did you get one?
Last week.
Or last week, okay. I knew I had gotten one.
Yeah.
We put out an email from Brian Butler, like on the last day of school, one of the last couple of days, and I did a J-call.
Yeah.
And we will continue to have them mail cards and flyers out to people. So the Vital Smart Shoppers program works in this way. You'll log on with the instructions on the card to the site, and this is if you know you're gonna have a procedure that you need done, like an MRI or a tonsillectomy or something like that. And then, correct me, you can jump in if I'm wrong, but you go in and you can, it'll price for you different facilities. And you get a monetary reward depending on which tier you choose. If you choose, you can get up to, I think, a $500 check if you choose a facility that saves the plan a certain level of savings. So you might be saving our plan $3,000, and we're rewarding you by sharing that savings, some of that savings with you.
Cool.
And it varies.
Yeah, it's a shared savings program.
Is that for active employees?
It's for everybody.
Anyone?
Unless you're on Medicare, I don't know.
That's
the
coordinates for Medicare?
Possibly not. I'll double check for you and we'll let you know. But there's more to come for that. There's different, you'll get mailers. Mona, I know, and they're going to be sending out emails because this is going to catch like wildfire. Once one member finds out that they can get rewarded to go see a lower cost alternative and they get paid to do it, saves the plan money and they get money in their wallet. So we definitely want that program to be a success, and more to come on that.
I have a question. Do you have to wait? What if you pick the cheaper one, but they say, okay, well, we don't have any openings for a month now because we're kind of busy?
I have a personal experience. Just last week, we got a card in. We have a similar program through Hub. Conceptually, it's identical. And my wife was scheduled for an MRI on Monday, and it came in on Thursday or Friday. So the timing in the mailer is important because it's reinforcing that this is there, and it might just fall at the right place for somebody when they're having these procedures. There was a number to call, and they asked me a number of questions and gave me pricing of 6 or 7 different facilities within Lafayette, within a 50-mile radius. Actually, I said, well, I'm not going to drive past Baton Rouge to go get an MRI, but it was quite intriguing that there were some facilities in this area that were as much as $1,200 and others as low as $475.
The same thing.
For the same identical procedure.
I guess you'd have to shop, Deborah, if they said, I need an MRI and I want to have it done as soon as possible. They say, well, we don't have an opening for 2 weeks. You might pick another facility or decide whether you want to wait.
There also may be an advocate, because I dealt with this benefit advocate, and I would imagine that it comes with a benefit advocate that can help move that procedure from the other.
They will assist with the providers. So if you need to get in quicker, Vitals have their folks will assist in helping you get in as quickly as possible. And we did have just a meeting a couple weeks ago. We know your employees a lot seek services during the summer because they're off. So we want to make sure they really know about this program, because in the next couple months is when a lot of them are going to have procedures done. So this is really the perfect time for that.
We'll check and see about the Medicare situation, because I didn't get anything.
Okay.
But
is there a number that you can share with us?
Yes,
so we can share with others?
I can email it.
Yeah.
I think this is an exciting, probably one of the best things I've seen in this plan so far, because it finally subjects the medical industry to market, which has never really happened. You know, you can go, it's like going to the mall and saying I need a dress and not knowing any prices and just saying, well, go to Dillard's rather than Sears and get the same dress. You know, this is really going to, I think, revolutionize, also cause competition in that once doctors figure out nobody's coming to them because they're charging $1,200 for something else that's $400, we're going to see prices have to come down. It's just going to...
And it brings consumerism into the plan, and everybody wants to save money.
This could have a major financial impact on the plan in a positive way, plus help the employees.
So, Ms. Mona, you need to work on your back to school in-service notes and like especially for our department.
Yes.
Where you hit us first.
Yes.
So what are some ideas about 3 or 4 things that we could push out to employees just to further generate additional savings?
Beyond the vitals?
Beyond the vitals.
Have you considered telehealth?
Not really.
Telehealth could be another area where employees have access to basic primary care via telephone or FaceTiming. They can prescribe medication over the phone. They can diagnose things like common colds. They can diagnose skin irritations. Just basic stuff that most of the time would take an employee out of the classroom if it was during school years. That they could do after hours, pick up the script after hours, and save themselves a trip to the doctor.
And this is already, there's a brochure for that. I can send that to you, Mona, and you can distribute that. It's already built within the Blue Cross self-funded plans. A lot of employees wouldn't even know about it, honestly, unless I've used it before. It's similar to a program you guys probably heard of called Teledoc. You call it a doc. Well, with the Blue Cross program, you download an app to your phone. You physically have to, the doctor has to see you. They're not going to prescribe medications to someone who's a phantom person. You have to be there and talk to the doctor. They call in your script. It's a really, really good program, so I can provide that. And Hub also has some pieces internally that just reminder wellness flyers and things like that that you guys can post to remind them, because we want your employees to go out and have a wellness exam. The healthier they are, your cost of the plan is going to remain down. So there's multiple brochures that we can send out, and whenever you're ready to start whipping them out, we can do that.
Telehealth, taking advantage of preventive services that is also delaying maybe more catastrophic services and expenses down the road. More additional education on prescription drug utilization to keep those brand name prescriptions out of the mix as best we can.
Is there any talk about changing the guidelines on colonoscopies with the recent study results that people have been doing? They're recommending it younger than 50.
I haven't seen anything come out yet.
Nothing yet, but as soon as any of that is updated, we get compliance updates and everything like that. That would talk to that.
Well, one of the things that and I've mentioned it at several of the meetings. There's one particular drug that, along with a couple of the others, but I asked for the cash price like at Walmart. Okay, on the plan I have a $30 deductible for the 90-day script. Okay, but over there 90 days with this particular drug is only $10. Okay, so there's a $20 savings, and multiply that by thousands of people. If we could get people to start doing that, asking for what's the cash price. Apparently Walmart buys this particular drug by the gazillions, and just passes on the savings. So it's a thought.
Through the plan.
Right.
Do what? They don't run it through the plan. You pay the cash. So instead of paying the $30 through the mail order and whatnot, I only pay $10, and it's the same 90-day script. It's the same. It's the same. In fact, the pills are exactly the same. Okay, so it's just, that's a thought.
And for some people, it's great. We just got to remember there are generics, and then there are generics. And for some people who are allergic to dyes or fillers, or one size doesn't fit all of them. It'd be nice if it did.
No, that's true.
But I think getting that information to people, not just to the employees, but also to retirees who can save money to the plan as well.
If we could get maybe like a list from, and I'm using Walmart as a because it's a big box store. But if we could get maybe cash price for certain, what drugs do they do cash price with, and if that's the case, then if we have a listing of it, we could send that out to our members and say, okay, if you're taking this particular drug and you're on the 30-day plan, you can get it much cheaper if you just simply do this. And then as far as for, if you can't go get it, well then Walmart delivers. So you can get it through the mail from them. So it's just a thought, and it's whatever,
Another request for you. I've done a cost analysis on the high deductible plan, and in most cases, I've noticed that it would be more beneficial to the employee for the high deductible plan. Can we get an analysis? What would happen if like 30% of our basic plan switched over to a high deductible plan? How would that affect our actual cost and expenses? Because we're going to have reduced premiums, but hopefully we'd have reduced expenses as well.
Agreed.
Right.
That would have been another comment to your strategies to drive costs just through consumerism and
the single
twice about
people,
going to the doctor.
the single people that don't use the doctors hardly at all. Sometimes as you get older, you end up going to some of those other plans.
And that's what I'm curious about for the people that are actually utilizing the health services. And the analysis I've looked at, it's still more cost effective to go to the high deductible. But as far as what would be the effect on our actual plan itself, if we had 30% of those people on the basic plan switch over, because we will have reduced premiums coming in, but hopefully we would have reduced expenses. Y'all would have the numbers to look at that. I don't have a clue.
You're talking about 30% optionally switch, or are you talking about requiring?
No, option, no. But you can explain and educate them that, look, we've looked at this and did an analysis, and in most cases, we can save you quite a bit of money. You know, you're going to get a shift moving over to the high deductible.
Right.
But
so much of everything that's been said is education, which goes back to Mona's territory. Any more comments or questions for these
On the
folks?
issue with the prescription drugs, is there a plan similar to if you put in a code for a CT scan or something, if you put in a code for some kind of prescription, we'll give you a listing of what's at Walgreens, what's at Walmart. The same situation where if I'm going to go get a prescription, I can type it in. It's there.
Find out your best. Almost like you can do with gas, where you type in.
Well,
there might be something with RX benefits we can check.
There's it's called a formulary listing for medication that'll show you what drugs fall in each therapeutic category. So you find whatever you're being treated for in the different drugs, and I'm sure there is a way to price them out. Or I'll contact RX benefits and see if there's an easy
That's really seems like it'd be a lot more difficult for procedures. They've gotten that down pat.
Right.
You know, if I'm taking if I'm leaving the doctor and I have a drug, I could go in the thing, pipe that in.
Mark Schomburg.
RX running.
Am I going to go to CVS?
Good
or
RX
Walgreens
or
or
Walmart, they do that. There's a card, it's Good RX, I believe is.
We have a stack of them in the office on the credenza.
And if you go online, you can they'll tell you like Walgreens, CVS, they'll give you the price of the drug.
Yeah.
I wonder if we could eventually incorporate that into kind of a rebate where we encourage people to use that, and if they do save major money, they get something. Because the prescription, if it's $20 times 12 months, it might be worth an employee, if we put their skin in the game, get a share of the savings. We can push not only the procedures but the medications in the same direction.
Right.
Do we have a formal educational plan for all these types of options that we present to employees?
Open enroll.
Yeah.
Does that get to every employee in retiring?
No, not your
No, because the retirees we mail out directly when we have changes, but they're not subject to open enrollment IRS cards. But
So
every
maybe we
employee
could get
does.
the information to Pat or Butch to do at the retired,
Sure.
one of the retired
Oh, yeah.
teacher meetings in the fall. So they can help save as well.
We can have, every time y'all get together, we can have something new to present. I mean, it's for, maybe not a new initiative, but
Right,
refresher on something that's
sure.
available.
A retiree, I'm sorry, Rich, go ahead.
We do still have the discount when they take the test and whatnot, you know, those.
The wellness.
The wellness program,
Are
yeah.
they doing that for retirees utilizing them?
Yes.
Do you have a percentage? Can you tell us a percentage? Because I still have people, I have to remind them to do it. They have no
We send a
recollection.
postcard every year.
But I'm telling you, you may, but they call me, I don't have to do it anymore, but they come to my house and I have to help them because they're not computer literate.
That is a challenge.
Any more questions or comments? Thank you, folks, and we'll move on to new business with basic life insurance. If there's no unfinished business. Any unfinished business?
None that I know of.
Okay, new business.
Okay, I've invited Todd Whitley and Matthew Carney, and they're here to talk about some challenges we've had with basic life insurance for retirees. And just to give you a background, we've offered for years now, the board has paid for basic life insurance for both active employees and retired employees. We furnish an amount of $10,000, which when the person turns 65 reduces to $7,500, and age 70 it reduces to $5,000 and stays at that level. And so So we've seen a significant premium increase in 2018. So I've asked Mr. Whitley to come up with some possible solutions, and some of them which I offered up and some of them he's tweaked. But if you would like to go over the information, that'd be great.
Okay. I think when we talked, was it December, we talked, and I was telling you that what you're in right now is your retiree population is increasing and your employee population is going to stay about the same, and not increasing as high as your retiree population. In the future, that will continue as you do that, and your retirees will eventually eclipse the number of employees that you have working, which isn't a good scenario for term life insurance. Term life insurance is not a vehicle really designed for that. So last time, I think, I don't know if did they each receive this in the package?
They did, but they might not have brought up hard copies, so it'd be good if we passed them.
Here's something that we kind of came up with regarding last year. The premium for the life insurance or retirees went from 94 cents to $2 per thousand. As you know, you have a number of retirees, and with life insurance, what happens is eventually they pay upon a death. And so there's no incentive for a retiree to drop off the life insurance because they're always going to be there, so an eventual claim will come into being. So just to give you kind of what, based on the numbers that I've received from Unum, and last time I think I told you I went to 3 other A+ rated carriers and they didn't want to write your business, primarily because it's losing money. So we all agreed that let's figure out something to help get it into positive so that, you know, eventually we might be able to go to the market. So right now you have, if you at the top line, your current situation is that under employee paid life for retirees, you had $2 per 10,000, excuse me, $2 per 1,000. You're looking at a volume of 13 million. So your premium on 1 year for retirees to have the life insurance is $312,000. For active employees that you have here, which is almost double the number of employees, you have 53,000. You're roughly paying 6 times for retirees on the cost of what it's costing for your active employees. In option A, we were looking at the situation, well, what if we were to say instead of the $10,000 benefit, every retiree just had a $5,000 benefit? What would that do to us? And Unum came back and said, okay, we'll knock it down to $1.75. And of course, the amount of your volume reduces to about $10.5 million, which therefore reduces your annual premium to about $221,000. Being mindful of how many people would be affected in that, at the bottom you can see a number of employees impacted. So already 2/3, since they're 70 plus, they're already at the $5,000 mark. So it would roughly affect about 1/3 of your retirees to move them down to $5,000 benefit. Option B is if we were to implement a new supplemental plan, which life insurance companies look at it this way. If we can bring in more premium to pay claims, then that always helps your situation. If you can get more of the people in your workforce to buy more of the voluntary and give them more opportunities to do so, we would increase premiums coming into the total plan, which would help us offset future claims. Within these 2 plans, you can do that. If you do that, then they've agreed to reduce the cost to $1.50 per 1,000. I always like going after these guys because I'm talking small numbers. But you go to $1.50 to 1,000, so it reduces your annual premiums down to $190,000 that you're paying for the retirees. The other thing that we've thought about is, do you continue to offer the life insurance as being a part of the life insurance for the retirees in the future? Because eventually, as we said, that's going to continue to escalate, and those will eventually become claims that happen, which means eventually you're still going to be in a cycle that you're always going to have that happen. Term life insurance is really designed for people working a term in their life when they're in the workforce, they have kids that could be going to college, they have mortgages. Most people are two-owner income homes and they depend on the income. So term life was really developed for a term in their life. Permanent life insurance that we have with Texas Life is more designed for, I want to take it with me, it's going to keep on. You buy it at a lower amount at a lower age, and then it keeps on, you know, because they had that factored in. So we're trying to figure out what can we do to help lower the cost to the overall parish and still keep a benefit for your employees. So we have talked about, do you end the $10,000 going forward or any kind of retiree life benefit after they retire? Do you end that? And you can do that with either plan. What you do is you can keep the people right now, you can keep them insured to, you know, whether they are, or lower down to $5,000, and then you just snap a line and you say, after this date, we're not going to provide that life insurance to any retirees anymore. So those are some decisions that you certainly have to make.
Could you give us the numbers, the amounts per year again?
The amounts of,
Yeah, 60, 65, whatever.
oh, right. At age 65, it reduces to 7,500.
Okay.
And then at age 70, it reduces to 5,000. And that's pretty much the
That's it.
other parishes surrounding that I surveyed have a very similar program. They're almost identical.
And prior to 65, it's 10,000,
Right.
whether you're working or not working. So if you're working
Right.
at 70,
Right.
correct?
Yes.
Yeah, if you continue working and you're working up to age 69, right, you're still getting that, I guess 65, it's the same reduction for retirees and active.
Oh, it is?
Yes.
So if you're working at 70, you reduce it to
5,000.
5,000 anyway.
Yes, ma'am.
And when you were talking about ending coverage for retirees, what I understood is we would say as of this, anyone who retires after this date
Right.
will not have it. But
Right.
those already retired
Right.
are
To
left
keep it.
alone.
So you're going to grandfather in the people currently.
That already have it.
Makes sense.
Right. It's just that, do you grandfather them in
At
at 10,000, or do you reduce everybody that's retired to 5,000, keep them that way? I'm being honest with you. This is a 3-year rate guarantee. I'm gonna be honest with you. I think you're gonna look at this issue again in a few years. It's not gonna go away as long as you keep this going. Their claims are out there ready to happen. So.
Any questions, comments, motion?
I wonder about bang for the buck. Are we really providing anything? And I'm getting close to being part of that group. Are we really providing anything? Is $5,000 upon death really going to make that big of a
You don't
difference?
have it, yes. If you don't have it. So I'm not going to say, you may have it.
Well, no, I
But there
don't,
are
but that's
people,
okay.
but there are people who work in the system. It would be a bind, and that would help alleviate some of the burden.
I can tell you when my first husband died,
I'm just saying.
I was very glad that I had 10,000 for insurance, or I couldn't pay for his funeral.
But you know what I look at? To me, it makes sense. If you have a whole life, and if you get it when you're young, 21 when you start working, you might be paying, I'm guessing, $10, $12, and you'll get that $10,000 when you're 75 and die.
Right.
That's, you know, to me that makes more sense, and it's more affordable for everybody.
Well,
But the board's paying for this.
yeah, the board is paying for
But then
this.
the employees could pick up that $10, $12.
Oh, I
For the
got you, the
rest-
supplement.
Yeah, when they get it when they're young. Again, that comes
Yeah,
back
you
to
get it when
education.
you're
That
young.
comes back to the open enrollment that they do. They do talk about the Texas Life program. That is a permanent life program. That, you know,
Yeah.
again, I think I used this.
Yeah.
I think I used this last time. Is that I've got a dishwasher and a microwave in my kitchen. The microwave doesn't clean dishes very well, and the dishwasher doesn't cook very well at all. But they're in the kitchen. They have different purposes. So you have different life insurance programs for different purposes. The permanent life that they offer through Texas Life accomplishes what you're talking about. But again, they have to buy it when they're young. Now, honestly, I think what happened, I think it was good intentions a long time ago, but I think what's come back to you is that it's becoming a cost program that you're going to have. But this is something I'd like to offer is that, you know, we were talking about the supplemental program. one of the things, and I'd like to share this with you because I think this will help with what you're looking for in the future.
This is option B that we were.
Yes, sir. This is option, putting in another option to help your employees, because a lot of them can't afford the 25, they can't afford $100,000 worth of permanent life insurance, but they could afford maybe a $10,000 or $20,000 worth of permanent life insurance to kind of take the place of what you're doing here. But what they can't afford on a term life basis when they're in their working years, they can't afford a $100,000 life policy. And I'm going to show you that. I'm going to show you that in a little bit. So once you get this, I want to walk through this with you just very quickly. You'll see over on the far left-hand side, you see a little bit of description of what we're going to be going over, and then you have current, what your current program is, and what we're proposing to you. Your current plan is that you have employees that buy in increments of $1,000, and they can have a $50,000 maximum benefit, no more than 1.5 times their salary, and their guarantee issue is $50,000. A guarantee issue means that you can get that amount of coverage at an open enrollment or when you become a brand new employee without any medical questions. So what we're proposing is to put a plan in place that has increments at $10,000, a maximum benefit of $500,000, no more than 5 times salary. An employee life minimum would be $10,000. The employee guarantee issue would be $200,000, meaning they would not have, if you're at an open enrollment, let's say we're going to be doing an open enrollment in September. Let's say that's a time frame. You do an open enrollment. Somebody comes in and get all up to $200,000, no more than 5 times their salary, without any medical questions being asked. The reduction formulas are the same. Let me show you something else in your spouse life benefit. Right now, your spouse life benefit, your maximum benefit is $2,000. The average funeral cost in the state of Louisiana, according to the National Funeral Home Directors Association, is $10,000. Including a cemetery plot. So that wouldn't even cover it. So if you go over here at a spouse life benefit, they can buy it in increments of $5,000. Again, they can get up to $500,000, no more than 100% of what the employee gets, and they have a guarantee issue of $25,000. Okay, the same reduction cost as in your current plan. Your child maximum benefits are $1,000. Under the new plan, they can get up to $10,000. Okay, and all these are at the same cost that you're currently paying, the same rate you're currently paying. We can provide this plan for you. Okay. Furthermore, if you institute a plan like this, Unum is going to come off the cost of the retiree life down to $1.50 per 1,000 versus the $2 that you're paying right now per 1,000. So it's a win-win situation. Number one, your employees have a better opportunity to get more life insurance. Number two, you're lowering the cost for the retiree care that the district is paying on their life insurance. Just to give you a couple examples, Experian did a study on Louisiana, and the average mortgage debt in Louisiana on their home is $150,000. So if you're limited to a $50,000 life policy, you're not even coming to a third of what the mortgage debt is on the average in Louisiana. Average cost for public colleges and for state residences is $10,000 per year. That's according to the College Board. So a 4-year degree costs you at a state institution, if you're residents within that state, costs you a minimum of $40,000. So these are things that you could help the employees out. You're going to help the district out, the parish out, and their cost element as well. Interesting too. The child rates on this is going to be 80 cents for a $10,000 policy. Right now, the employees are paying $1.75 for a $2,000 spouse policy and a $1,000 child policy. So we could further reduce the cost for the employees in that area. So really, and this is a 36-month rate guarantee.
What percentage of our employees are doing a voluntary insurance?
Half of them.
Half of them?
Which they're being maxed out at $50,000. I will tell you, I don't have another school district that I work with. I work with over 600 of them that have less than 100,000.
Now, Todd, on the chart, the reduction formula is a little bit different from right now. It's 75% at 65, and
Yeah, I think they,
is
I
that
apologize,
gonna
I think it was enhanced on the last.
change? Is it gonna change to this one?
Yeah, I think they enhanced it on this,
Okay,
on this.
65% at 70, and
Let me check that.
okay.
No, wait, no,
I mean, this
I'm
is a better
mistaken,
form.
I'm mistaken. 75% age 65, 50% at age 70, I apologize.
So it will stay the same.
It will stay the same, it'll stay the same. It will stay the same.
Okay, that's cool. I didn't notice that till just now.
No, that was my mistake. It will stay the same. 75% at age 65 is what they will have, and then at age 70, they'll have 50%. My mistake.
That's good.
Thank you for bringing that up.
Sure.
So let me give you an example. Let me give you an example right now. So, good example you gave a while ago. The average age in Lafayette, I believe, is 41. So if you look at this rate grid, at age 40, 41, a person can purchase a $100,000 policy for $9.80. And that's for a term life policy. Then they can work with Matthew on getting a permanent life policy for the $10,000 or $20,000 when they're younger, and they're going to be set.
Well, listen, I have a young lady. I was a foster mother.
Yes, ma'am.
I have a $10,000 policy that I got when she was 15. I'm paying $8.82, and it's until she dies. No change in the amount. It'll be $10,000.
Right.
Yeah, I'm the enroller, by the way. I'm the feet on the ground guy for Lafayette Parish, and I hear what you're saying. We push for that all the time, and 21-year-olds do not get permanent life insurance. They need the money for.
I'm paying.
Yeah.
You heard me say I'm paying.
I know, and that's actually one of the big options with the permanent is grandchildren and children. But I was having the conversation earlier that getting to the proposed for the voluntary, getting that in place is huge, because that gives us, the enrollers, the opportunity to say, let's do $100,000 for $9. It'll be good for 20 to 25 years while you're still working here in the parish, and let's combine it with a permanent $20,000, $10,000 of permanent, and so that'll be in place when the term is over with. I think this gives us a great opportunity to bring that conversation up. So as an enroller, it gives us the opportunity to get more people enrolled. As a parish, it gives y'all the opportunity to save, save on some hard numbers. Like, you get to make a decision saving $100,000 per year in your premiums, and if not more than that going forward into the future, if you grandfather people in. So it gives y'all a great opportunity, and it gives your employees a great opportunity to take advantage of some great voluntary prices and the conversation to pick up some permanent.
So your proposal is the voluntary in addition to making the changes in either option A or B? Is that what I'm saying?
No, B.
B would
That would be option B.
It'd be option B.
The same as they
That will
allowing
reduce
us
the rate.
to give this enhanced supplemental plan.
So it would reduce the cost to the parish by about, reduce it by about 40% if you just did that. If you gave every employee a better opportunity and you reduced the retiree coverage to $5,000, it almost reduces the cost of the parish by 40%.
I'm looking at this, and I'll look at two different things. There is an existing class out there that we have an obligation to. I also look 10, 15, 20 years down the road where we have a whole new group of outstanding claims just waiting to happen. And
I think that's
we're going to be kicking the bucket down the road again and again and again, and we see what that's gotten was with the federal government in Louisiana as well. I kind of would like to look at this and throw two stones at this problem. I would like to try and see about letting them offer the enhanced supplemental plan and going with option B. And also I would like for us to try and do like a clause, let's say, looking at the rates, there's a big reduction in rates once you're below 50. So roughly anybody that is born 1970 or after coming into the system or whatever, that the retiree life insurance was not an option. I'd like for us to phase out the retiree life insurance. As you're an active employee, let us keep it and give people that are young enough, that have enough time, that they can get in at a lower price point when they can buy $10,000 of insurance for $7 a month.
So basically what you're suggesting is you're going to grandfather people in, and those who are born after,
say 1970.
1970.
Anybody that's like 48 or below, something like that, and I'm way past that.
and they would have the time to do this voluntary.
And they have time to get educated, to think about what their options are, and to plan for the future.
Let me make sure, I want to make sure that we're all clear on this, because this is the term life, these are the term life rates, okay? So every 5 years, you're going to go up a little bit in your cost, okay? When you retire here, you do not want to take this with you. This is not something you want to take with you. You're going to drop it. You can't afford it because you're going to have to convert this to a whole life policy, which will be impossible.
That's like a 20-year term?
Yeah, what it is that you buy it in like it's every 5 years it goes up a little bit. But you know, let's give a couple of examples. You said you're paying $8.80.
$8.82.
Okay, $8.82. Okay, so the parish right now is paying $20 per employee to have a $10,000 policy. Matthew, what could you do for somebody that's under the age of 40 right now in a Texas Life plan?
Right now, about 40, it's $1 per 1,000. So you're looking at 50,000 for $50. And also with the Texas Life, we can do children and grandchildren, basically under 15 years old. It's $7.75 for 50,000.
That's really cheap.
So that's excellent to hear.
That's
And
term?
by the way,
That's term?
no, that's the permanent Texas Life.
Oh, that's a good
And
policy.
to answer your question, it's $2 per 1,000 for every single retiree, no matter the age. And so the retirees don't go off the same bracket as what they're able to enroll into while they're an employee. So if an employee wanted to enroll into the voluntary at 50 years old, that's how much it would cost them. But if they're retired at 55, that's the amount, the $2 per 1,000 that it's costing, no matter what their age is, whether they're 80 or whether they're 50 and retired.
And that's for right now, because the parish, the only reason that you're getting a $2 per 1,000 rate is because you have that many people involved and you have like 7,000, 8,000 lives involved here, because you have the retirees, then you have the active employees, and then you have people buying the voluntary. It's the only reason they're getting $2. If they didn't have that, it'd be astronomical. I mean,
So your recommendation is that the motion needs to be that at retirement, there is no life insurance. Forget the 1970.
that would be,
Yeah, do that or either a date.
or a date, like you were saying, you could do a date if you wanted
Do a
to.
date of retirement.
Yeah, like
Right.
January 1/19, if that's when you want to put it in place.
Yes.
I think you would have to determine that date and where you're comfortable with. But at some point, I think you're right. You're going to need to, because you're kicking the ball down the road. It's never going to go away as long as you have it on you. The way it will go away is that eventually life insurance company will cancel and just say we're not going to do it.
Yeah, they spend a lot of money on that term.
One thing to throw out there is that, again, as the enroller, I'm meeting with people every day where 10,000 goes a long way later on in life. And even if you reduce it to 5,000, there's something there for them. And these are options for you to be able to choose from. You know, we're not necessarily saying, you know, putting a star next to something and saying, do this. But 5,000 still goes a long way for some people. There's many people I meet with every day that they don't make over 20,000 per year.
Yeah.
And so their employers saying, I've got you for 5,000 at the least. And it's good branding for the parish to be there. You know, even if they're 80 years old, the brand, it will get back down to other people in the community that you're there for them in retirement at something.
That's a cafeteria deduction, right?
What's
On
that?
the employee side, it's a cafeteria deduction.
Yes.
So meaning they're actually paying less than that after taxes.
Are you doing that in Texas Life? You put in the cash?
Pre-tax, post-tax. So the life insurance and the disabilities are always post-tax, and that's because
No, I like
they're not taxed when they're paid out.
No, the disability is post-tax, but the
Yeah.
life insurance is.
Life insurance and disabilities post-tax, so that it's not taxed when you receive the money. Now, the group rate and the cost reduction that you're getting, essentially, you know how you can always pay something semi-annually, monthly, yearly, automatically getting the yearly, and you're able to do it monthly. And then also it's the group rate, how many people you have participating in the group. And that's why Texas Life is one of the best products that we have overall, is because it's offered to so many people across the 12 states that we manage and the various other employee offerings that they have at the company. You're grouped in with tens and thousands of people. So every 30-year-old that Texas Life says we have permanent life insurance for you, every 30-year-old is getting the same exact premium. So it's not necessarily a cafeteria plan like with the other things. You can do a calculation of the dental and it's actually costing you less than what your premium you're paying because it's pre-tax. Life insurance doesn't exactly work like that, but there are group rates, there are discounts because it's offered in the payroll deduction.
Is there a motion from anyone?
I'm not in agreement to get rid of the 5,000 because there are people that it would truly benefit. So if you X that out, I can see, and I'm a retiree. If you tell me at retirement for me to keep my $5,000, I'm going to have to pay, and I'm just guessing at a number, $3, $4 a month. I'm going to pay that for the rest of my life. So then my family would have that $5,000 to help with my burial. But to take it completely away, I'm just not in agreement with it.
Could the premium be paid, full premium be paid by the retiree if they opt to choose it? So that $1.50?
Well, since it's a group plan, this is a group plan paid by the parish. That's what, because you might have, instead of 2,000, you may end up with 500 people paying it. But there are going to be for sure claims. You see what I'm saying? There's not that much money coming in. So, you know, what I think what you could do is you could look at this and you could say, okay, let's have everybody that's a retiree get $5,000 of the life insurance. And then put this in place, put option B in place. A couple of years, come back and look at it again and see where you're at. If we significantly have increased the voluntary participation and the premiums are up, then we can look at it again and say, what's the next step that we need to take? I think at some point, though, you may want to say, we may need to say, you know, anybody coming to work at X date will not get a retiree benefit of the life program.
I think what you're saying is it's going to end anyway.
You're going to have to end it. It's going to end on.
Be cost prohibitive.
It's going to end with your. Yeah, to me,
or you can let it die.
I mean, it's already doubled.
I think it's going to end at your direction, or it's going to end at your carrier's direction, because other carriers are looking at it and saying, okay, well, all you did was bring me back claims. And then that's what they're looking at. From their perspective, they're looking at, these are claims waiting to happen. This is a 10, 20-year life, and I'm looking at claims happening. Whereas I would look at it and I would say, you know what, if I can do it in my direction, I'd say, let's make this step now. I think you need to probably reduce it down to 5,000. That would be my recommendation, just to get your costs down. But I would seriously look at, can we eliminate the retiree plan at some point? And you may look at a date and time that you say, we're comfortable with this number, that they would be out of that benefit.
I think you're probably right in that. I think we need to have probably some more education toward our employees.
Yes, sir.
I firmly believe in educating people so they can stand up on their own 2 feet and work their way through life. And this is another thing that I think, as we're providing this and continue to provide the life insurance benefit to retirees, that's a crutch they're leaning on. They're procrastinating, so they're not doing anything about it. And then all of a sudden, this is the only thing they have when they're retired. So I think we probably need to educate our employees that this is coming down the road. Please be aware that we are going to be facing this out.
Well, you're taking the first step of phasing it out by going to 5,000.
Yeah, is there a motion to go to the 5,000 as per the gentleman's recommendation?
I'll make a motion to go with option B, which is the reduction to 5,000, allowing them the opportunity to offer the enhanced supplemental plan.
So that would mean everybody
Retirees
would get at most 5,000. Right, correct.
Well, everybody would be at the 5,000 because you don't go below that.
Right.
Yeah.
Is there a second to the motion?
I'll second it.
Butch? All those in favor?
We have a question. I have a question. Just want to make sure it's clear.
Okay.
Everybody's going to be grandfathered in? Are you saying
We're
that?
not gonna set a sunset
Okay.
date yet.
Okay, all right. Okay.
We're
Just
gonna
wanted to
come
make sure.
back and see how that
All right,
works,
okay.
Okay, wait a minute.
right?
To clarify
Is that
this,
right, Philip?
current retirees would still be at their current levels as far as the 10, 7,500?
No.
Or
No.
No,
No.
everybody be 5,000.
If this goes through and the school board
Yes.
approves it, all retirees will be set at 5,000.
And you still make your motion?
I'll leave the motion on the floor.
Butch? Second. All those in favor? Philip, are you voting in favor of your motion?
Yeah, I'm gonna vote in favor.
1, 2, 3,
And I hate to-
4, 5, 6,
Oh, and
7. Motion passes.
And I think with what he's saying, if we're doing that, we need to make sure that we set a date or work on setting a date that says, okay, if you're hired after this time, it's very, either there will or won't be, you need to be making arrangements for a policy on your own. We have a good one that we're making available to you. You need to start it as soon as possible because this is not going to be.
Well, I think that
Matthew.
goes in the education. We're just gonna have to educate those who are coming in, okay? This is what it is, we have to do this. You know, it's like right now, the state doesn't wanna cut anything. All they wanna do is add taxes, add taxes, add taxes. We can't do that here, okay? So basically, what we're doing is we're cutting, in essence, to keep something.
Right.
And then
But
those coming up,
Whoever we need to educate, if it's by age, if it's by
Matthew, can
year
that
of
be,
your
Well,
retirement,
your enrollers
projected retirement.
you know,
and you
push
see
that.
with
Yeah.
his,
Yeah, absolutely, especially with the opportunity of the option B, like I mentioned quickly earlier, is that with the role of option B gives us the ability to go in front of everybody we meet, and we have a very high participation in Lafayette Parish. We meet many people in person to enroll, and it gives us the opportunity to present the voluntary plan, and all of us enrollers, we try to take care of everybody we meet. We like to offer at all times a term and a permanent. So if a term's only going to cost you $10, well, let's do $10 of the permanent also. We always try to have that conversation. Now, a lot of people are in the situation where they just want to take advantage of the thing that costs them $10 and nothing else more. Because they've got a $100 dental bill, they've got $800 a month in health, they've got, so many things to take care of. It is a tough conversation, but we always push to have the conversation. And a change with the voluntary is going to be a great change to bring that up.
Since this group has decided to max at 5,000, what is that cost savings to the board?
Cost savings to the board is gonna be $120,000, so it's gonna reduce the cost by about 40%.
40%, that's right.
And with a 3-year rate guarantee, so that it also gives you a buffer to have a very in-depth conversation about possibly dropping it completely for the retirees in 3 years.
Or grandfathering
sooner.
in, or setting it to...
Yeah, absolutely, the grandfather in.
All right, open enrollment, Mona, every teacher in Lafayette Parish and every employee will hear this information.
They meet
Not
individually.
not just new teachers.
No, everybody.
Yeah,
They go
into
Individually,
the schools.
If they don't ask
We
them.
would love
Yes.
100% participation, but we see close to 90% in-face enrollment.
That's
Some
great.
refuse
But
to
do
go.
they have to ask these
Yeah.
questions? Do
But
they
then
have
that's
to
a
know what
choice you make.
questions?
But they have the option
Present them
to
with
hear
all
it.
this
And
information.
that's the best part about the voluntary plan that'll be coming out. With the increases of the maximums allowed and the guaranteed issues, is we always, actually, there is always a point for us. It's one of our rules. If there's something guaranteed issue, we mention it to every single person that we see. We never know who we come across, yourself, someone 20 years old, whoever's across the table from you. We don't know what type of problems you may have that'll prevent you from getting insurance outside of an employee offering. So whenever there's something guaranteed issue, we bring it up to every single person.
And maybe what we want to say when you're mentioning open enrollment is to say there are some changes coming. Please take the time to at least talk to the person
would it help to put a date in the future? So this seems nebulous, because that could be 1 year, that could be 5 years, that could be 3 years.
Can we
If
put it
we
on our
say
agenda in September?
Yes.
Can we put it on our agenda to discuss the date in September, or do you?
I'm just
Yes.
want to throw the idea of putting a future date, like January 1st, 2020.
Right.
Or something in the future that you can deal with to say, we have a date, not this, well, it may happen, because we know it's going to happen at some point. If we do set a date, then at least gives a time period and gives people a set date to say, well, this is when we're going to stop grandfathering in. Anybody who retires out to January 1st, 2020. Gives you a year and a half
Well,
in the future.
At the very least, the motion and what was just passed today gives you a 3-year rate guarantee.
Yeah.
So you're looking at saving $120,000 from what you're currently paying for your premiums for the next 3 years. And so if that's something you want to have the conversation next insurance committee meeting, then you go right ahead and do that. Or if it's something that you want to gradually look at over 3 years, you have that opportunity now to have that
I think what you're
conversation.
saying is so his people having a speaking point to say,
Right.
hey, by 2020, they're not going to have a retiree program. Is that what you're trying to say?
Right. So you need to
Yeah, so
start.
I'm gonna be here for all these insurance committee meetings. I know this is gonna be a point, and so I'm not gonna let it get all the way to 3 years down the road before we have the conversation again. Because we enroll in September.
Seems to be kind of short, but if you give them a year and a half now until
Yeah.
a year and a half from now, this is going to
Like
happen.
2 enrollments to be able to talk about it with people. Right. Yeah. So perhaps over this next year,
Rather than talking
we
about it now,
have
then
to
2
talk
years
in
from
insurance
now,
committee.
hit it right away, put it way
Matt,
out
do
in
you
the
want to make a
future.
motion? Do you want to make a motion?
I'm not ready for a motion.
I mean, I can wait to talk, we
Yeah,
can
let's
talk
wait, man.
about
I'm
the
not
next
ready.
one.
Okay.
Motion to adjourn.
I've met Mr.
Second.
Just before we go, just so we're all on the same page, by passing option B, that gives you the hope or the possibility maybe of going back into the market. Again, you said, that we would not have.
You would need some experience and improve.
Okay,
So it
Next
would be at least a couple of years because you've got to get this
but we've got a 3-year
experience.
guarantee, isn't it?
Yes, you got a 3-year guarantee, so I would stick with this because actually you're saving $360,000 over the next 3 years. So that helps the parish. But at the same time, you're hopefully going to change up your loss information.
Well, you know, so one of the things that I think people are seeing their health insurance premiums going up.
Yeah.
And so with that in mind, and this is going up where it's going to become prohibitive, then I think you have a better chance of doing the Texas life plan. You know, I mean, if we do that, so.
Mona just wanted everybody to know, we fund this out of the health plan, so this may help save, we just saved the health plan $120,000.
Oh, I'm sorry, okay, yeah. Your benefit plan, whatever
Is
you call
is
it.
there any other new business? The only comment is to, please, if you get a chance to look at the absentee policy in the bylaws. We've had a couple of people, not many, who've missed several meetings. If you can talk to them and see if they're still interested, or if not. If there's nothing else, we'll adjourn the meeting.
I'll move with adjourn.
Second.
Very good.
Unanimous. Thank you, everybody, for coming.
Brooke, can I have another one?
It's been-
Go ahead, no, shoot.
You want to start? Yeah, I need to talk to you.